is the founder of Swoosh LLC, an educational firm that helps traders master a proven system for profitability. A self-taught day trader with over a decade of experience, she specializes in shorting stocks that gap, a strategy that has set her apart in the industry. Before trading, Melissa spent 17 years in banking and finance, working as a mortgage broker across multiple states. In 2008, she made the leap to full-time trading and never looked back. You've probably seen her in Fox Business, CBS, Cheddar TV, RT America, where she frequently shares her market experience. So, Melissa, how things in the Big Apple?
Wonderful. We actually have nice weather today. It actually feels like summer for the very first time this year. So we've had some very cold May in
Are you uh,
Manhattan.
are you catching any of the big shows these days?
I haven't seen a show in ages, actually, to be honest with you. I've seen some jazz shows, but I haven't seen anything on Broadway in quite some time. So we'll see. Maybe this summer, maybe in the fall.
Oh, I'm always a sucker for an old-fashioned musical.
Well, thanks for having me. Welcome, everyone. It is officially June, and it is a very exciting week to trade. Why? We have the unemployment number, which comes out Friday. That's going to have some volatility. Obviously, the market is on edge about what's going to happen with tariffs. The tariff deadline is coming up in a couple of weeks. So I expect June to be completely different than May. And obviously, we saw a lot of volatility in March going into the beginning of April in the market, but I think it's going to continue. There's a lot of reasons the market is feeling shaky right now, but you can't deny the fact is that the market is in an uptrend. That's a fact. And many stocks are too, but I think it's very unusual right now because you don't necessarily have all of the same sectors going together in the same direction, which you would normally have in a very, very, very strong market. So it's interesting times to trade. But today I'm going to talk about what I do, which is trading on the side of institutional money for big profits. One of the things that I really like this week, which I had done a put in, which fell today, was Tesla. You can take a look at that chart. We did a put in that, which was a short, and I actually still think Tesla is lower. And as John said, I appear on TV. I appear on every channel. I talk about the economy. I talk about the stock market. But I really, really not only love doing television, but I really love trading. So the type of trading that I do allows me to go on TV in the afternoon because I trade in the morning. I'm focusing on the morning period when the market opens between 9:30 and 10. If you're interested in more information, you can email me at melissa@thestockswoosh.com. You can also call me at 929-3200-GAP. You can follow me on Twitter, Facebook, YouTube, or Skype. So again, like I said, it's summer. And it is just a great time to do fast trades. Then you don't have to worry about low volume in the afternoon, people going on vacation, or any press releases that come out. You can take the move and book it. I say chunk it out, where you take the trade, get the momentum, get out. So when I'm talking about institutional money, I'm talking about momentum, big momentum coming into a stock. And I prefer to short, okay, like I was talking about Tesla. But I will go long. We did a long in BA this week, which worked. But I prefer to short. And one of the reasons I prefer to short is because its stocks fall way, way faster than they ever rally. So again, the type of trading that I do is based on gaps, which I'm going to talk about a little bit here today. But they're fast trades, okay? And I like that in any time of the year, but particularly in the summer. Because again, in the summer, I don't want to sit indoors. I live in the Northeast. Like I said, I live in Manhattan. And so we only have a certain number of months where we're going to have beautiful 75, 80-degree days. Before you know it, winter's going to be here as quickly as summer came. So I want to be able to get outside and go in Central Park and enjoy the day. So I try to make the money early in the morning and then get out quick. So if you're thinking about doing this, whether full-time or part-time, if it's something that you've been wanting to do, you have to have a plan of action to make it happen for yourself. If you do not have a plan of action, you're not going to be successful. Lots of times people want to take trades, risk money in the market, and they don't know what to do. They don't have a strategy. They don't have a system. Maybe they're just looking at a couple indicators, or they're watching television shows, or they're watching fundamentals, and then they're getting beaten up. You know, even the market has been, the way that I would describe the market in the last 3 weeks has been pretty much in a range. In a sideways range. Again, we're in an uptrend, but we haven't really been exploding to the upside. And that's kind of unusual for what, if you would say, well, this is a really bullish market. But like I was saying, you really need the right tools to be successful in order to get good results. And again, what do I mean by the right tool? You need a good system. So how do I make my stock picks? I get up in the morning and I may have a watch list. It could have 10 things. It could have 50 things. It could have 30. And then I go through every single thing that I see that it's gapping. And I tend to go to the short side first, looking at stocks that are gapping down first. And then I make a list. And then I go through and I develop a system where I rate the gap based on the daily chart to determine if I think it will continue in the direction of the gap. If I do, I take it in the direction of the gap as an option or a day trade. And again, I like to do both. Or if I don't think it's going to, then I will not do it. Okay, so I'm never ever flipping it. Let me just see, do I have it set up to take questions? Just wondering. I don't know if I have it set up to take questions, Kate, if you're there.
Yeah, so the questions will be in the chat on the side there.
Okay, very good. If anybody has any questions, you can just plop it in the chat. Let's take a look at Apple. So again, Apple, we did puts, okay? So just, and we shorted this too, but here's an example. So what is a gap? Stock closed here, gap down. I'm going back to, this is before Memorial Day week. Stock closed here, snug as a bug, May 20th, right on this line here, approximately, it was a little bit over 206-ish. Closed at 4 o'clock. Opened the next morning lower at 9:30, a little bit above 204, open, rallied, and fell. Closed it was a pretty big move. Again, when I'm looking for momentum, if I'm short, I want a big fat red bar. If I'm long, I want a big fat green bar. Okay, that's how I'm making the money, by getting the movement and the momentum. And again, obviously this has volume too. So again, what is a gap? A gap is a difference between the close and the open. So this closed at 4 o'clock. The US stock market closes every day at 4, opens the next morning at 9:30. So this was a gap down. Now let's look at a gap up. I didn't go long this, but technically this was a gap up where Apple closed here. This was the beginning of May 9th, and opened higher on the 12th, Friday to the Monday, almost up to the 210 area. So this was a bullish gap. So this is a bullish gap. This is a bearish gap. Okay. So again, I'm not predicting the gap. I'm playing it once I get it. I'm predicting that it's going to go in the same direction it's gapping, or if I say no, it's not going to, then I'm not going to do it. I never switch it. I never reverse it. So in 522, we did the 205 Apple puts. It expired on the 30th. So a put is basically a short. It's just a cheaper way to do it, and you can hold overnight. So I did the 205s on the 22nd. So let's take a look at it. So here. So closed here, gap down. I did this one, got the drop. Boom. The next day then, on the 23rd, it fell here. So I just want to show you, take it over. It came down, broke under 194. So this was a really nice trade. So I got the move overnight in this case here. So a lot of people want to do options because they think that they can take, cheap positions compared to doing the trades on margin, which I do. I still trade on margin, but I like the fact you can hold them. You can hold them overnight and get the move in the gap. I did this late, which was unusual for me, but I did do a trade that was 3:37 in the afternoon. So this cost $2.70. Again, I'm trading now for 17 years, so I risk a good amount of money, like an advanced trader risk, I call it. I risked $8,100 in this trade and made almost 10 grand. It was 122% return investment. If you have a very small account, you could have taken one. You could have risked $270. If you took 4 and risked about 1,000, 1,080, you could have made 1,320. That's still a good, solid trade. Again, that's taking it one day, exiting the next. You're getting in one day, getting the momentum the next day. Again, if I don't get the momentum on the live day, I will hold it. In this case here, though, I took this trade very late. So my expectation was that this was going to follow through. Now, again, going back here, I had no idea it was going to gap down this big because it's really tanked, really tanked under 200. But I called the gap right in the direction to continue to sell off, which is what happened here. And that's what it did. And again, even though Apple was rallying today, it's been rallying for the last couple of days, Apple has a lot of problems. It's tied in very tightly to what's happening with the China issues. And again, you can turn on a different channel every second of the day and hear someone talking about tariffs lately. But, some people think it's positive, negative, whatever your take is, it's affecting stocks, it's affecting companies, it's affecting pretty much everything in the market and the overall market too. So when I'm looking at something, I get up in the morning and look at the daily chart, and then I rate it. And like I was saying, this is my tool. The Golden Gap rating system is a very useful tool. It's something that you can learn from me and apply it yourself. It's not like I'm giving my opinion. Like I might say my opinion on interest rates is we're not going to have any interest rates cut this year in 2025, which is going to shock markets. And if we do, it'll be one at the very end of the year or none. So again, that's my opinion. I'm basing that just experience and knowledge and information and, again, my opinion. But that's not like looking at a chart and looking at technical analysis and then analyzing it and coming up with a conclusion. That's very, very different. Now, technical analysis is what? It's looking at past price data to predict future price data. That is what I do. The only difference is that I do it in a very unusual way where I'm using the gap to make the determination. Again, there's no way you can predict with 100% certainty what's going to happen in the future. So I developed something that I feel like I have high odds. 26 things is a lot of things to look at to make the determination. And I feel like if I get 20 or more, then I can get it in my favor. And so again, the higher the gap, the better the rating. Here was another really big one that we did. This was one of the biggest shorts we had in the last month. This is falling today. And, you know, it's interesting because a lot of people have been wanting to buy this UNH. Again, if you love fundamentals, if that's your thing, fundamentally, this has had a lot of problems and a lot of issues and a lot of things going on with it. But we did some puts in this. We did some day trade shorts in this. This was one of the biggest shorts we had in the month of May. And remember, you know, a lot of times people think, oh, it can't keep going. As it can't keep going, it can't keep going down. It's going to go up. Why? I mean, if something can't keep going down when it's at zero. When it's at zero, I wouldn't short it. If it's at a penny, I wouldn't short it. I don't do penny stocks. But could something keep going down at 340? Hell yeah, it can. This stock gap down here on the day that we did it, from here to here, fell off a cliff, and within 3 days was down here at 250. It had, if you want to go back to even the prior day, $130 move in 3 days. And from the day of the gap, for the initial gap, it was almost 100 points from that day. So again, stocks can have very, very big moves, not just on the day, but overnight in the gap. And this is how you can make a lot of money trading. And again, when I'm talking about institutional money, there's nothing that makes these kind of moves other than institutional money and big money. And I'm not just talking about the price point here, because this is expensive. I'm talking about really anything that has volume or trades in the market. A lot of the companies we do, a lot of the stocks we trade, the trades we do, options or day trades, are companies you know of, you've heard of, or you recognize. So we did the 340 puts on that day, the 13th. I'm going to go back here. And you could have done a lower one if you didn't want to pay the price for the 340s. So again, we bought the 340 puts and sold it to exit it when it had that sell-off. So it was $14 for one. Again, if you did one, you still had a huge trade. That's 471% return on investment. And again, these are, you know, huge trades that can really, you know, make your whole month, make your whole week. Not only cover trades that you take that are losers and then really get you ahead because they're so big to keep building up your account. And it's so important for people with that. Even people that have small accounts especially, but people that have large accounts, it can really make a big difference having almost a 500% return investment trade. So I did 7 contracts and made $46,200 in this UNH. Again, just go back. I bought the put. Again, I didn't think this would go anywhere over 340. So I held it, got the drop out. So again, I got out into the momentum, which was the selling. So what happened here again, what did institutional money do with the UNH? They dumped it. Because you wouldn't have something go like that big, that fast, that quick, that huge, without institutional money selling. And you also have hedge funds, big funds, institutional money also shorts too. Now, what if you did one? You did one contract and risked $1,400. You could have sold it at 80, profit $6,600. Nice trade. Good, solid trade. Again, $1,400, I would say you would need at least $5-6 grand in a trading account to take that kind of risk if you're experienced. Again, options you can trade without a margin, and that's why people usually like trading options. Me personally, like I said, I like it to be able to get this type of overnight move where you can get it bigger. Any questions here so far? And again, UNH today, I know is selling off today, and And again, everybody has a different opinion about where it's going to go, what it's going to do, what's going to happen. But I wouldn't be surprised at all if UNH sells off like a hotcake. And it's selling off today. So, this is one of the things that has been on our watch list constantly, and has just really outperformed anything that I could have thought that it would have done. And again, that's a short. Like I said, I love to short. I like fast trades. And whatever the reason is that the panic steps in, it could be, again, something like with UNH, the possibility of a DOJ investigation, could be fraud, could be something that happens with the earnings that don't turn out right, could be the sector, could be like with Boeing, maybe there's a plane crash that sometimes happens, you've seen that react. There's so many different reasons that a stock can gap, and there's many different reasons why stocks can sell off. And again, even the market, when it sold off, when we had the sell-off from February into March into the beginning of April, before the tariff pause, was a lot of companies, people have been long, the market's been strong, and they took profits and they sold. And then you had some shorts that came in too. But it's mostly panic. It's very rare that you would have panic buying. I'm not saying that panic buying never happens, but it would be rare. I've seen it, but it's really rare. Like we saw a little bit of that kind of after the election last year. Tesla had some panic buying come in it last year, 2024, and had some beautiful bullish moves. But usually people, with their panicking in positions in the market, in their stocks, it's because they are scared that something's going to fall and drop, and therefore they sell it. And then it can have a very large move because, again, panic comes in fast and quick and big. That's one of the benefits of shorting, and why I've tended over the whole life of my career of the 17 years I've traded, I've tended to just stay on the short side first. If I can't find a good short, then I'll look to go long, but I really love to short. And I have a knack for just finding just the right thing to short and the good entry to short. But like I was saying, following the smart money, whatever you want to call it, big money in the market, smart money, institutional money, to me is the only intelligent choice. It's the only path that will lead you to success, because large money that comes into the market can control stocks. It can wipe out a big group of retail traders if it wants to. It can move stocks, it can move the market. And again, it's the volume and momentum, and again, it's very powerful. And if you've ever been in a trade and you've gotten just to ride the coattails of institutional money, which UNH is a good example there, it's very easy to make money when you're with this. It's almost like you don't even have to do anything. And that's the beauty of trading. Again, finding something like that every day is what I've tried to hone down to doing every single day, to find something like that, which again, if I don't find something like that, then I wouldn't do anything on that day. Then I wouldn't take a trade on that day or do anything. But anyways, how do I determine what the smart money is doing? I use my tools, and this is my rating system. And I don't skip it. I do it. And it's based on the technical analysis in the gap. And again, it's something that's based on the daily chart. So you could have a daily chart. There's no special software. Anybody can do it that has a daily chart. Now, again, let's go over here. What is a gap? So a stock gaps when the closing price on the day, whatever, 4 o'clock, is different than the 9:30 open. So this here closed at 4 at one price and opened at a different price. You say, well, doesn't that happen every day? Well, basically, most days, stocks will gap, or the market will gap most days. I will tell you that. You don't necessarily know where it's going to gap. Is every gap a playable or predictable gap? No, it's not. But that's the whole point of trading. And that's the whole point of getting up early and scanning and trying to figure out, is this going to do something? Or is this just a nothing burger where you wouldn't do it? In this case here, remember, this was the very beginning of the whole collapse here. We went from April 2nd to April 3rd. And the panic had started to come in, but it didn't really come in a big way until the next day, which was the 4th. We had another gap down, sold off like a hot cake, and then the third day, which was the 7th, which this is a gap down, actually. Again, I'm looking at the SPY chart here. It fell initially and then flipped. And then we sold off the next day. Remember, this is all before the pause day, which nobody knew Trump was going to do until he did it, which was in the middle of the afternoon on April 9th. And the market has never looked back since. But to me, despite the fact that we're an uptrend, the market is in a shaky ground here. Like I said, it's been sideways for weeks. And I've traded many bullish markets, and to me, the market should have been ready over the high by now if it was really, 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 really strong and everybody was behind buying. So the tariffs are the main issue that's hanging over the market. And then, of course, the Fed and interest rates and the bond market. And as much as the administration likes to think that they control everything, and Scott Bessent, the Treasury Secretary, has been on TV talking about the tariffs almost every day. The administration doesn't control the Fed, interest rates, or the bond market. So we're trading really in very interesting times. And again, I have gone long some things, but I'm not really totally excited about going long this market. Here's another one we did here. This was Apple. Again, closed here, gap down, fell. Again, this one took 1, 2, 3. We had done puts in Apple and it took 3 days to go. So when I'm doing a short, again, if I'm doing a put, I'm doing the weeklies. So I'm doing the Friday expirations. Sometimes it goes a day, I call it. Sometimes it takes a 1, 2, 3 or 1, 2, 3, 4. So again, that fell there. And again, nice gap. Apple's another chart I've been watching too to see what's going to happen. Again, you know, we're not in earnings season right now. Next earnings season doesn't start till July. That's a long time away. It's a long time away. So, like I said, I've been trading for 17 years. When I started trading, I didn't know what I was doing. I did make a lot of money in a short one day in a gap. And I said, you know what, I think this is something I want to do. And then I just kind of threw myself into it and taught myself the system. But it took me 3 years to figure out the stuff that I've been doing now for as long as I've been doing it. And I've just never did anything else. I don't feel like I need to do anything else. Again, every year I kind of bump up my size to make more money. And I started doing options about 10 years ago. I didn't start out doing options when I first started trading 17 years ago. So again, the benefit of learning one system and staying with it for as long as I have is that I've become an expert in it. Not just shorting, but gaps. And I think that a lot of people, when they trade, they're jumping around from too many things to too many things, and they never really get good. And you want to give yourself a chance to get good at something, because that's where you're really going to excel. When the market is easy, when everything's trending in one direction, whether it's up or down, it's easy to just go long or short anything in the world and make money, and things go with the market. But when it's choppy, or when the times get tough, or when it's hard to predict the future, that's when you really got to be on your game. And you do need a system that works under any market conditions, and you do need to be good at doing something. And the normal stuff you might do in any other market might not work. Like, again, we're in a bullish market, but it's not working to go long everything. Again, I just talked about Tesla, which sold off like a hotcake today. Like, we can pull that up if we have time at the end. Anyways, I find gaps and rate them using a checklist. Gaps have to be qualified. The checklist tells you what to look for in the price of the stock. So again, I traded the side of big institutional money for momentum moves. Big money equals big momentum, big money equals big profits. That's how you do it. Then whether you have 100 shares or 1 contract or 1,000 shares or 10 contracts, the whole point is to get a big move and to maximize your return on investment or your risk to reward, or whatever type of trade that you were doing. So again, UNH was a really nice one that we happened to do quite a few trades in, but here was one on the 15th, we did a day trade. So again, when I'm saying day trade, this is a trade I call live in the room, where I'm shorting the stock on margin, getting in, getting out. So I could have held this. I just like to trade the morning, but it's kind of crazy where it went. Stock close here, gap down. This was the 15th. I shorted it at 275.10, boom. Got out at 270.20. Made $9,800. You would have needed a margin account to do this. This went all the way here. Again, I was already in the puts, so I think it's easier to hold puts, but this came down to 250. I could have held this for another $20, which is insane. But for me, it's just easier to hold options. So that's the other reason why I like to do day trades and options too, because I don't have to worry about the wiggles and jiggles as much in an option as much as I do in day trades. But this was a beautiful drop, a beautiful sell-off here in the UNH. So it worked quite well. Anyways, getting back to what I was saying, having a tool helps you get organized in the morning. Otherwise, you can get in your head, should I do this? Should I do that? Should I go long? Should I go short? What's the market doing? You know? But what I do is very useful, keeps me organized, keeps me consistent, okay? And I use this tool each morning to determine what stocks to trade and when. It is a very useful tool in any market, but particularly in this type of market, which, like I said, has been choppy and volatile. It also can help you decide if you should exit a long. Say you rate a gap and it rates good as a short and you happen to be long it, you could get out. You could take profits because it's going to keep falling. So that's another way to use the system too. And again, it takes the guesswork out of your trading. A lot of times people are 50-50 with their trading. And also, I never go long and short the same stock the same day because you can't have 100% conviction something's rallying and something's falling. That doesn't make sense. Again, you have to believe in the trade and the money you're putting the risk on. You have to say, this is worth it. And I don't care if it's a small amount. I don't want to lose $500. I don't want to put any money on at risk if I don't think the trade's going to work. And that's the whole point of going through the rating system every day. If it convinces me, if it rates 20 or more, then I say this is going to go, you know. Anyways, I was talking before about the Fed. You're trying to trade the news or Trump's tweets or fundamentals. I mean, you're probably having a crazy, stressful year. There's no way to predict the things that are happening every second, but you can see the price. You can see the price that something's trading at. Again, live price action is a very invaluable tool. And you got to have a good broker, you got to have a good internet, you got to have all those things, you know, your chart set up. But that is, you know, I feel is going to tell me what's happening. You know, again, when something's selling off or when it's getting bought, moving higher. The other things we can't predict. Again, we can give opinions on that, but no one really knows. No one really knows. Here was another one we did. This is, again, another example of a gap. It was AMAT. Stock closed here, gap down, open, dropped. So this was a short. Again, I like to do fast, quick trades, and this was a day trade here in the AMAT. That was on the 16th. That was earnings. So we're at the end of earnings season now. It's a tail end of earnings. There's a few things out in the next couple of weeks, but the busy time doesn't start until July. It is the second week of July after the July 4th holiday. And that's when a lot of stocks will report earnings, all the big ones you know, Apple, all the banks will report. And again, last earnings season was very interesting because a lot of companies didn't want to give any guidelines for the rest of the year. People didn't want to give guidance because they didn't know what was happening with tariffs. And are we going to know what's happening with tariffs by the pause deadline at the beginning of July? I don't even know. Will it get extended again? Will it collapse? No one knows. No one knows. Again, these are all things that will affect the market. But I don't do long-term trades. I don't do leaps. I'm doing day trades. I'm doing weekly option expirations. So I'm in, get the move, get out. I'm in, get the move, get out. That's how I'm trading. I'm not doing swing trading. Any questions here so far? How are we doing? Good. All right, any questions, let me know. Getting back to what I was saying, you must become an expert. And for me, I've become a chart expert. We're reading the price. In order to become successful in the market, you have to become an expert, a specialist in one specific strategy. I choose a strategy that reads institutional money, or what I call power money in the market. This brings momentum and opportunity. Reading this is a skill. It's like if you were to learn a sport, the more you do it, the better you get. Practice, practice, practice. And again, the skill that you learn from me can be required through education, and it's education and practice. So a lot of people shy away from trading education because they really might have taken one class, didn't learn anything, lost money in bad trades, and then they get down on it. But the fact is, not all trading education is bad, and not all trading education is good. You have to find someone that you connect with, find a good mentor, find someone that, you know, has a strategy that has a high win ratio, and someone that you can wrap your head around what they're doing, where you're like, okay, I think I get this concept here. Let me learn more about it. And again, the time frame has to work for you. Like I said, I trade in the morning. But it is important to have education, because if you don't know what you're doing, it's very easy to lose money. And so trading education is important. Far too often, traders don't understand exactly how important it is. It is okay to ask for help and admit you don't know what to do, or you're losing money and you don't have a clue. It is okay to admit that what you're doing is not working. if you're not having a good start to the year, for example. And the sooner you come to terms with reality, if you're losing money, that you don't know what you're doing and that you need help, the faster you can turn it around. And then you can turn it around very quickly. So, you know, you can turn your year around. We've got 7 more months left in the year, or 6.5 almost after next week. We have plenty of time left in the year to do well and make money. And again, who knows where the market is in a month from now, 2 months from now, by December. I'm not predicting that. I don't know. We could make new highs. We could go down to April lows and break them. It's neither here nor there for me because I'm doing the short, fast trades. So again, you can do this if you learn how to do it well, and you can excel at it over time as you're doing it. And then again, replicating the same trades and the information by doing it over and over again. We're just doing different things. But you know, I have been into this UNH. I'm telling you, this has been like, again, it's selling off today. This has been one of the top shorts, and we did this also on the 13th. Here was the 13th. So this is a 1 minute. Stock close here, gap down, open, rallied, boom. We shorted it. 336.95, boom. Got out, 327.55. This kept going. Again, another one that kept going after I got out of it, but I got out of it. Came down in here to 319, but I got out at 327.55 and made 75.20. Again, you could have bought a put. If you didn't want to do a day trade in here with the price point, you could have just bought the closest put wherever we did it and just wrote it down. There was another idea. Again, if you don't have a margin account. So there's all kinds of ways that you can do it if you don't have a day trading account. You know, people cannot trade short in their IRAs, but you can look into it and see if you can buy a put. You know, lots of places allow you to do that. Anyways, how can you become successful trading? Number one, like I said, you need a winning strategy. Learn it. Learn it first. Number two, you need a supportive mentor. Do and follow. And three, become an expert in one thing. Implement a winning mindset. Trade daily with conviction and confidence. I'm very confident in what I do because I've been doing this for a long time, and it's the only thing I do. So again, I'm not teaching Forex and trading Bitcoin. I'm not doing all kinds of things. This is it. This is all I do. I focus on shorting, gaps. That's it. You know. And again, whether I do an option or whether I do a put, it's the same system. Okay. So again, you need a winning strategy. What is mine? Just to review, it's golden gaps and what is a gap. So a stock gaps with the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. So does almost everything gap every day? Yes. Is everything predictable every day or good? No. I'm trying to determine who's in control. If I can't, I'm not going to do it. Sometimes there isn't anything. Do you know what I'm saying? Nobody's buying or selling it. Then there's no play. Then you do nothing. That's why I don't trade the same thing every day. But, you know, getting back to what I was saying, the most important thing if you want to make money is to get the direction right. It sounds very simplistic, but you're going to lose if you get the direction wrong. You will lose. There's been so many stocks that people have been going into in some of the Reddit chat rooms and some of the meme stocks. Like I know GME has earnings coming out soon in the next couple of days. You know, it's a lot of people are long that. You know, they're going to get crushed if it doesn't move higher on the earnings. So again, if you have a bias, make sure there's a reason for your bias that makes sense based on the technicals. Because that is extremely important. If you are against the institutional money, you're going to lose. If you're with it, it is very easy to make money. So again, this is how I developed the rating system. So what is a golden gap? A golden gap is a gap that rates 20 points or more per the golden gap 26-point rating system. You can take the trade in the direction of the gap. You can do the trade as a day trade or an option. So again, I like to do both, but you can do whatever works for you depending on the type of account. But every morning I get up and I rate it before the market even opens. I know what I want to do before 9:30. Usually before 9, I go through the checklist. I can do it as early as 6 a.m. And the checklist tells me what to trade and what to look for each day. And I don't necessarily rate the market every day because I'm not necessarily playing the market every day. Because again, some days the market gaps and there's nothing to do. Okay. So again, this is one of the ones we were watching that we did several trades in Apple. We did the 210s. Let's look at this Thursday the 15th here. This was the one we did here. So I bought the 210 puts here. and then got the drop on the 19th. So this was Monday. Thursday, Friday, gap down Monday, fell. Again, take it over, came in, dropped more than $5 in the money. So again, a lot of people worry about options with holding stuff. If you get a big move or the momentum, you could get it on the day before. You could get it on the last day. That's even happened to me. This cost $2.80 for one. Again, I risked $8,400, made $9,600, great trade. 114% return investment, that is a solid trade. I'm trying to get 100% in every trade. I don't always, but I try. And again, this dropped, fell more than $5 into the money. So we did the 210s. If you took 4, you could have made $1,280. That's, again, a very nice trade. In something, if you had, like I said, 5-6 grand in an account and you could have done 4 contracts, you could have done 1. You could have risked $280. It's the whole point of you're trying to determine who is controlling Apple. The bulls or the bears, okay? Or Tesla or anything we're doing. If you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and get out after the move happens for profit. But you have to understand how to trade with this side of power, and you need to know how to find it. Knowing how to read what institutional money looks like is essential to becoming a successful trader. The benefit is that you can win big trading on this side of power. And so it's really important to, like I said, get the direction right and use a consistent system. Now, I was also talking about not only having a system, learning it, but following a mentor. So I mentor people. I trade in the room. I call the trades in the live room when I'm doing them myself. I'm telling you where to get in, where to put the stop, where to get out. And all you have to do is follow me. Again, your sizing is something you determine yourself based on the size of your cash account. But I try to make it as easy as I can for people to follow me. But, you know, it's something that if you've been trading for a long time and you've been doing something opposite, you may have to unlearn it, or maybe you're brand new. I've taught people that are brand new that have never traded the market before. And sometimes people that are brand new actually have less, you know, issues in their head about doing stuff where they're used to doing gap fills or things like that, which I do not do and does not consistently work. So we're taking the gap, like I said, in the direction of the gap. But I really think having a mentor can help you. It helps you focus. You log into the room. People are focused on listening to me. I do all the prep work in the morning. I focus on shorts. I call the trades. I run the room. And again, constantly talking it through with people about why I like the trade or maybe why I don't like something. You know, like I don't like the market higher. You know, we've been talking about that. Like I don't think the market makes new highs in the near future. It could, it might. Again, I'm not long the market. But again, why gaps? Gaps are the most powerful show of price action in a chart. Gaps have large moves. Gaps can move up or down. Again, I prefer to short. Some of the biggest momentum moves in a daily chart come from a gap. And when I trade, I'm looking for and trading momentum. Then whether you have a small size or a big size, it doesn't even matter. The whole point is you can make a lot of money even if you have one contract, even if you have 100 shares, you know. It's totally up to you how much you want to risk. Any questions here so far? How's everyone doing? So anyways, what would you come and learn from me if you wanted to take my class? You will learn the 26 points. You will learn the checklist. You will learn the entries. You will learn the rating system and how to help you determine who is in control. You will learn the exits. You will learn targets. And again, like I said, I prefer to short. So let's say I'm right and the market sells off again, like we saw March into the beginning of April. If you don't know how to short, you're going to have a tough time. You're going to have a very tough time making money. Lots of times when people want to buy the dip, while sometimes that works, it doesn't always work. So you got to be very careful about that. And so again, did that work at the beginning of April, at the April lows? Yes. Is it going to work the next time? What if it doesn't? What if it doesn't? And again, it's crazy, but there are times when people will go hog wild. And I'm just making this up, like, for example, if the market sold off again and then bounced, okay, or tried to bounce or something, people could go hog wild thinking the market is double bottoming out, and then it could not do that, sell off more, and people will then give back all the money they even made from the April 9th pause up even until now, which we're above that price. like you're like, oh my God, how could someone get back 2 months of profits? Oh yeah, people can, because they go hog wild and they double down. And I've seen it. I've seen people blow up their accounts. Like, so people can make money for 6 months, 2 months, 2 weeks, 3 weeks, and then in one bad period, give it all back. So that's again why you have to be very sharp. I think you have to be sharp no matter what, or you follow someone that's very sharp. But in crazy times, we're in a crazy time right now. I mean, let's just face it, we are. In crazy times, you really got to be good. You have to be at your best. You have to be sharp. You got to get up early. Got to get a good night's sleep. Got to have breakfast before you train. Got to have working internet. Got to have no interruptions in the morning, at least for the first half hour while you're focused. Close the door. Don't talk to your kids or pets. Turn the phone off. You've got to be on. I always say I could be perfect for the first half an hour of the day. I can be perfect in the morning. It's tough to be perfect for 6.5 hours. You get tired, your eyes get tired, you have distractions, things like that. So we have to do the best we can do, and we need to support our bodies and our minds in doing the best that we can do. Do you know what I mean? Because the market doesn't care if you lose. Your broker doesn't care if you lose. Really? Seriously. The only person that cares is you. So you have to do good for you. You know what I'm saying? Anyways, a big flow of money going in a certain direction is what moves the market, stocks, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be on the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Even if you think it's not, it is. And that is the tricky part right now. That's the tricky part right now with this market. So again, I'm looking for quality, not quantity. I only trade when a gap rate's good. And people log into my room expecting to win. They have a winning mindset. They want to make money. We're very focused. Sometimes we're done by 9:45 and just close the room out. Sometimes we're done by 10 o'clock, 10:15. It depends. But I take it, book it, take it, chunk it out. I'm trying to just get the move, get out. Get the move, get out. So I'm not, like Warren Buffett, where I'm buying stocks and holding them forever. That's not what this is. That's not what I'm doing here. It's the idea of taking it and getting the momentum. And that's something that you can do. Like I said, if you're getting big position players in the market, dumping stocks or shorting stocks or selling stocks, you get the push down. And then we're shorting it, And then number 3, so learn a system, get a good mentor. Number 3, focus on one thing and get good at it, become an expert at it. And when people always say, well, how long is it going to take me to learn it? I have no idea because I don't know you personally. You can learn it in the 2 days I do the class. I have the class once a month on a weekend. You can learn it that weekend and just take it and do it forever. Or you may have questions. You may have to come back. It may take you a week. It may take you a couple days. Whatever. I'm here to come back to and to ask questions again in the room every day. But it is about working smarter, not harder. So it's important to get good. And that's why I just don't want to be messing around in the afternoons, particularly in the summer. But gaps happen in the market on a regular basis. However, some gaps are better than others. Some gaps are nothing gaps. And some gaps are very powerful displays of institutional money. The most important gaps in the market are gaps that signify a change in direction or a bigger move in that same direction. And we get both. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. That is how you know when the power of money will flow to pay you. So again, one of the benefits of shorting is just that panic comes in so fast, so big, and it's not something that you necessarily will be able to predict. So like I said, I'm not predicting the gap down in the market. But if I see it, I'm going to know whether or not I can short it or buy a put, or if it's going to flip. And if people are going to buy it, I don't know. But I'll know it when I see it. That kind of thing. Do you know what I'm saying? So you got to be ready to go when the opportunity is there. And we were ready to go when the opportunity was there. Again, I didn't know about the tariff stuff that was going to happen, exactly when it happened. But we took advantage of that move. We got those moves to the downside when that happened. And that's the processing that you do in the morning. You're thinking it through. You're going through. You're making sure you're double, triple checking it. You're using your brain. It's extremely important. A lot of people want to just use indicators and they want to buy, different things that just computerized. No, your brain is the best asset that you have. So you need to trust it. You need to use it. You need to think. So again, if I don't like anything before 9:30, I'm not trading. And then I'm not rushing to make decisions on the day. I'm thinking it through ahead of time in the morning before I even take the risk. And that's how I'm preparing. So the system tells you how, what, and when. How do you make money in the market? Trade a strategy and system that is profitable. You got to have more winners and losers or you're not going to make it. Golden gaps are a highly profitable strategy because they focus on large momentum to trade. What stocks should you trade? Stocks that gap and rate 20 points or more per the Golden Gap 26-point rating system. Trade the gap in the direction of the gap. When do you trade them? Early in the morning in the open when they set up and trigger. And you must have a structure in place in order to make any money. Like you can't be like even making a little, like you're going to lose if you don't know what to do. So you have to have a consistent system. Again, that's the support behind it that allows you to take the risk, okay? So what we learn in the class, you will learn how to measure gaps and rate them in the daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day, preferably, like that UNH did. Big move in the day. Early confirmation of my bias in the move between 9:30 and 10. Precise entries with follow-through and a good risk-to-reward target potential. So again, whatever money you have, you say, okay, this is what I'm going to do. I'm going to get up this time of the day. I'm going to do day trades or options. I'm going to follow Melissa. I'm going to look to make 1R. I'm going to rate the gaps. I'm going to do 1 trade a day or 2 trades, whatever. Come up with a money management plan and then follow it. Plans are good. Writing stuff down is good. That's how you hold yourself accountable. Otherwise, you're like all over the place like it's a computer game. You have to think of it like it's a business. You have to think of it like it's real because it is real. And you could do well doing this and you can make a lot of money. But a lot of people, I think, don't take it seriously enough. They have no plan. They have no system. They are all over the place. Again, they're getting sucked up into the news, which is very easy to do nowadays. I find that reading the technicals really helps me. And again, while I have to sometimes pay attention to the news because of the fact that I'm on television, I don't have the news on all day because it can be distracting. It really, really can. And then it can kill something. It can kill a good trade even because you hear something. And then it could scare you out of it. And you don't want to do that either. But anyways, this is real. You can do it. I've been trading for 17 years. I've been teaching people for a long time too. Follow your dreams. You can do it. Again, if you want to learn from me, I teach a class once a month. You will learn the 26 points. You will learn the rating system. You will learn how to short. And you will learn and understand how to get conviction in your trades. I think that people do better when they understand why. It's human nature. Why did this work, Melissa? How did you know the market was going to fall? Things like that. You understand and will risk more money and hold trades longer when they're good ones if you understand why. And again, that really helps your conviction. So it's all about the 26 points for me. And it's about empowering yourself to do it yourself. Because like I said, the one that needs to take care of you is you. They keep talking about inflation. I mean, we had a number last week. Quite frankly, I think prices have gone up and they're going to bump up more because of the tariffs. That's just my take. We'll see. We'll see. All of these numbers, whenever the numbers come out, they're always retroactive. It's always retroactive. So come 2 months from now, 3 months from now, 4 months from now, the numbers may not show what they're showing now, which is one of the reasons why I think the Fed is not going to lower rates this year because inflation is going to tick up. So again, the Golden Gap course is a complete system to use to trade. If you're interested in learning it, it's a full course on how to strategically find, pick, and play stocks that are professional bearish gaps. Classes this weekend, Saturday and Sunday, June 7th and 8th, 9 to 5. Class tuition is $69.99. You can be anywhere in the world and take it. Class is online. I'm doing a Hello Summer special, even though summer officially doesn't start till June 21st. But again, it's like 80 degrees in New York today. If you sign up for the class, the combo, which includes the Golden Gap and the trends by Friday, that's a deadline anyways, you would do Saturday, Sunday, Golden Gap, trends on Tuesday. Cost of the tuition is $79.99 for 2 classes, and then you get 3 subscriptions free for 1 year, which will take you into June of 2026. You get the option subscription and the trading room, all my trades free for a year, the market report free for a year, and the wealth manifestation course free, which is in July. And this ends on Friday the 6th. If you want to sign up for this, you can't go to the website to do it. You must email me for forms. And if you sign up today, you can get in the room tomorrow. Kate has that up. Let's just quick look at here, Tesla. If I put this up here,
Yep.
can you see the chart?
Yep.
Yeah, so everybody, see, just quickly here, I was talking about this. This has a beautiful, beautiful bar here, almost $20 on the day. High of Tesla today was 345, and the low was 327.33. But just look at the morning. So again, the most optimal time to trade is the morning. I think this continues. I think this continues this afternoon. I think it continues possibly even tomorrow. But this is a great example of what institutional selling. It got dumped. They dumped it. Again, here's 9:30. The open was 3:45. This is 9:30. I'm on a 15-minute, 9:45, 10 o'clock, all the way. This is just boom, boom, boom. So this is 45 minutes. That's it. That's all it took to do it. And this is not retail traders. This is institutional money, boom, and they dumped it. And I actually think this is lower even here today. So any quick questions? Thanks for having me. Good to see you guys, and have a wonderful, wonderful, wonderful June. If you're interested, you can email me at melissa@thestockswoosh.com, and have a great day.